Everybody, welcome to the first market update of Blockchain Champions. Today we are looking at the Bitcoin charts, the daily. I always try to look at the chart completely blank at first, just so it gives you an impression, because a lot has happened in the last uh, 2 years. We have the low of March, the Corona low, the massive capitulation wick, which actually gave us the start of our last run, all the way up to 65, back to high in the 28s, 69, and back to 33, and another touch at 34. So, if you look at this, what do you see technically? Well, there is a lot of things which you can see, and that's actually the beauty of trading, or the fun of trading, I would always say. People always ask, are we going up or down? And I always say, well, we go up, down, or sideways. I actually don't know. So what is trading? Well, trading is a game of probabilities. If you can reasonably establish, according to your technical analysis, that the price has a 60% chance of going up, then you can make a profit. Because if you take a long there, if you time it correctly, 6 out of 10 times you will be correct. And if you hold on to your risk management, then 6 out of 10 wins is actually enough to be a profitable trader. So, where we are today, right here, what can we see? Well, if we start back at the basics, we see we had a high, a higher high, and now we had a low, or we had a low, and we had a higher low, maybe even a higher low here, but that's, well, you can call it a higher low. And now we are at this little peak here, and look at the important levels, which I always look at. For me, important levels are previous highs and lows of bigger of longer time frame impulse waves. So what can we see here? Well, we have been in a pretty severe downtrend ever since we hit the 69,000. Lower high, lower high, lower high, lower high, and also lows just that keep falling. And then here, around this January, we made the low, and we made a first higher high, and then a higher low, and then actually not much change in this peak, but we did make a higher low, and then we broke out of this range with a higher low. So currently there are a few very specific things we can look at. I've moved my higher time frame levels, which I always seem to draw because it's quite full. There's quite a lot of them, and I think for starting traders, a full chart is only distraction. To go over it shortly, we have some weekly, monthly, and daily levels, support and resistance levels, which we can look to hold support, or which you can look to bounce against as resistance. But I want to keep it really simple today. So this is the volume profile of this whole range, which we've been trading in since January until we just broke out of it. Volume profile shows you the volume, the price at which the most volume has traded, and it's usually a very respected support or resistance. Are you above it, it's support. Are you below it, it's resistance. If you break through it, then it signifies strength or weakness in the chart. Well, to go over this small range that we had, here we came to it, and we actually touched it once, one day, and we broke through it later. We came above, tested this as support, bounced off, but there was not enough volume or follow through, and we fell back down below. Here we tested it as resistance, and back down and back up. Again resistance, but we still broke through, and then we never looked back and we moved past. So this whole area here was actually a very nice range to trade in. Just to make it visible. Not perfect how I draw it now, but this was a range. So we had a touch of the low, a touch of the high, another touch of the low, another touch of the high, and here, seemingly in the middle of nowhere, we made a low, came up to the point of the control of the range, and we made a higher low, which if you look at order flow gives you a pretty nice entry. Now here we broke through the range, and we seem to have bounced up on top of this range, and that's where we are currently. So at this current range, what are we looking for? Well, I keep having these white lines with important levels there. These are highs of previous impulse waves, previous waves, or previous ranges. To me, it always signifies strength or weakness if you break these levels with convictions, because it will signify you've made a higher low or a lower high. Well, a few days ago, at the end of March, we almost came up to this small range, but we didn't quite touch it. So we haven't even touched this level yet. So for me, there are a couple of things I look at the medium to short term. I either want to touch this, reject off it, fall back down, and back into this level. Then my first target would be the old point of control, around 42k. If we break that, we can rotate all the way to the lower area of this range and maybe even another touch of the low. So if you come here, you've had a lot of signs of weakness because you've lost this higher level, you've lost the point of control of the older range, you've lost this lower low or higher low, and now you're looking back at the lows of the range. For me, this would always be an interesting moment to look for a long. Yes, you can fall through. So if you want to play it safe, you will have to look at the order flow when we get there. Is there enough volume for a bounce? But then again, if I look at a chart like this, I would say that there is a higher than 50% chance that if we reach these lows that we will bounce there. Is it certainty? No. So that's one plan. Another plan is we actually stay range bound in this range here for a while, between the old ranges, until enough volume or decisiveness comes in to the side where we're going. That's our sideways probability. And another probability is that we touch this important level, we break through it, we backtest it as support, and we move over, or we move higher. Well, I'm drawing it through the second important level. If we break the 52k levels, I will be very bullish on the price chart. But these are the three options. An important pattern to look at is a swing failure pattern, which often occurs at highs or lows. What is a swing failure pattern? You break through a level, but you close back down below it. So what happens is you've taken a liquidity which has been stacked up above this important level because people have put their stop losses on their shorts here. So you stop out all these traders just to liquidate them and just to go back down into this range, and this usually signifies a trend change. That's why I would never advise breakout trading. Too many people look at breakouts, and trading remains a zero-sum game. So if everybody is looking at a specific level for their stop losses, the bigger players will use it to grab their liquidity. Because, like I said before, it's a zero-sum game. So if somebody wants to make a $50 million short or order it, then somebody else should be willing to sell this $50 million shorts. And for these high number of trades, or these high value trades, you need a lot of liquidity, and liquidity is usually stacked up just above or just below important levels. So in short, we've been range bound from the start of January until the end of March. We've broken the range to the upside, and now we're hanging above the previous range. To me, the first couple of signs of strength has been shown. A low, a lower low, another lower low. We break through the point of control, and we've broken out of this range and held it as support for at least once or twice. So to me, at this point, I am cautiously looking up. Why cautiously? It's because we haven't touched this important level. If we swing failure pattern this, it will signal for me it was at least temporarily a high and will move back down. If we break through this with conviction, with volume, and we backtest this level as support, then I see it as another range to trade in, and a high range. So currently it's not really decided yet for me what we are doing. I've given you my opinion on how to look at these levels. Oh, I might add that I'm always a very big fan of Fibonacci numbers or Fibonacci levels, taken from the 69K to the 33K. The golden pocket is around 56, 55K. To me, this would always signal as an important level to see if we can change the trend right here. If you break through 48, if you break through 52, this would be a level which I would have some alarm clock set to alert me that we've reached this level of interest and that I might want to look at the charts if something is changing. Well, I think I've already given a lot of things which I as a trader look at. I would like to emphasize that as an investor, I would always say dollar cost average. I have a very strong conviction that in the long term, Bitcoin is going only up because of the amount of excess dollars or euros or just money that gets printed. So in dollar and euro value, I would always assume that in long term, Bitcoin goes up. And to prove this, you can always zoom out to the monthly. This one starts only in 2018. And what do you see? Only up. If I would take not the Bybit chart but another chart, you could see it that it's actually since its inception in 2009, Bitcoin has gone only up, only up, only up. And I would assume that we will go only up for the next couple of years or decades. But that doesn't say that we cannot go down like before, 50 or 80%, which we've done before. So be safe. If you trade, never use high leverage until you have got enough experience and enough risk management. You can stomach the volatile moves which will liquidate any beginning trader. If you are looking to start trading, I would say make a dummy account, trade with $50 max, and just use very small orders just to see if you can trade 5 or 10 trades and if you can win at least 6 of the 10 trades. Well, that will be it for today. I wish you a happy Monday, or happy Tuesday actually, and I'll see you soon with the next market update.